All right, welcome everyone. Ready to dive deep into 2025?
You bet.
We've got a mountain of Cha-Ching episodes all about market predictions and crypto craziness.
Sounds like fun.
It is. We're talking Bitcoin, Ethereum, even Apple's big AR/VR push.
A lot to unpack.
Exactly. We're going to synthesize all these expert predictions, market data, you name it, so you can get ahead of the curve in 2025.
Love that. Give us the big picture.
Big picture it is. We'll tackle those spicy contrarian viewpoints too, just to keep things interesting.
Always a good idea.
Okay, so first things first. Let's rewind to late 2024 for a sec. Remember those year-end market dips? S&P 500, NASDAQ, the Dow, even Bitcoin and gold took a hit.
Oh yeah, definitely caught everyone's attention.
For sure. What happened there? Should we be worried?
Well, a few things kind of collided. Treasury yields went up, peaked at 4.64% actually. Biggest jump since '81.
Wow, that's a big jump.
Yeah, spooked some investors for sure. See, rising yields make bonds look better compared to stocks. Money starts flowing differently.
I see.
Plus, that whole inflation fear was still lingering. Trade tensions, the Fed's projections, created this uneasiness, I guess you could say. Longest year-end losing streak since 1966, actually.
So not exactly a confidence booster.
Not really, no.
Okay, so a perfect storm of worry, basically. But is this a sign of things to come? Or could it be a chance to buy low?
That's the million-dollar question, right? Market corrections happen. They can be scary, but they can also be opportunities.
True. All right, let's get specific. Bitcoin. Everyone on Cha-Ching was buzzing about its price surge. Almost hit $100,000.
Yeah, that 3.2% jump got people talking.
For sure. They kept saying it's the adoption era for Bitcoin, but I got to admit, sometimes that sounds like hype. Is this time really different?
There's definitely more to it this time, I think. It's not just speculation.
Okay, good to know.
One episode had this expert from Fidelity, Chris Kuiper. He was saying Bitcoin's becoming more mainstream, companies using it for treasury stuff, hedging risk, even insurance companies are exploring it.
Interesting. So it's not just for techies anymore.
Right, exactly. It's becoming more integrated into, traditional finance.
Okay, I'm starting to see the bigger picture here. But let's be real. Bitcoin's known for its wild swings. Those massive dips in the past makes me wonder if this stability can last.
Yeah, the volatility is definitely there. Part of it's because of the limited supply, only 21 million coins.
Right.
So any change in demand, up or down, can cause these big price swings. But here's the thing. Institutional investors are getting more comfortable with that. They're figuring out ways to manage it.
Oh, okay. How so?
Things like diversifying their portfolios, using fancy algorithms for trading.
So they're finding ways to ride the waves.
Exactly. The ride might be bumpy, but more and more big players are willing to hop on.
So Bitcoin's stealing the show, but what about Ethereum? Feels like it's playing catch up.
Yeah, it did underperform compared to Bitcoin last year, but 2025 could be a turning point. It all comes down to this Prague Electra upgrade.
Prague Electra upgrade. Sounds intense. What is that exactly?
Think of it like a total makeover for Ethereum, optimizing everything after the merge. The goal is to make it faster, cheaper to use, a dream for developers and users.
Sounds promising. How are they going to do that?
By supporting something called Layer 2 solutions. They basically make transactions smoother and less expensive by taking some of the load off the main blockchain.
Okay, I'm following. But what are Layer 2 solutions?
Imagine Ethereum is a super busy highway. Gets congested, things slow down. Layer 2 solutions are like building express lanes alongside that highway. They handle a lot of the traffic, make things more efficient.
So it's like bypassing the traffic jam.
Exactly. They use these cool methods like state rollups and optimistic rollups, basically bundle transactions together and process them off-chain. Then they settle the final results back on Ethereum.
Wow, sounds pretty complicated, but effective.
Very effective. Scalability goes up, costs go down, everyone wins.
All right, so Ethereum is getting a speed boost and a price cut. Sounds like a good thing, right? Any downsides?
Well, the upgrade could actually lead to some short-term revenue hits for Ethereum.
Uh-oh.
Yeah, so the big question is, will developers and users stick around during this transition? That's what will determine if it can really compete with Bitcoin in the long run.
It's a gamble. High stakes. Speaking of high stakes, Cha-Ching also mentioned stablecoins are making a comeback. What's driving that?
It seems like they're finally getting the attention they deserve. Even lawmakers are taking notice.
What's so special about stablecoins again?
Remember, they're designed to hold a stable value. usually pegged to the US dollar. So unlike other cryptos, they're not as volatile. Think of them like digital cash.
Right, digital dollars. But why are lawmakers suddenly interested?
Well, they're starting to see the potential for stablecoins to really shake up traditional finance. They offer faster, cheaper, more transparent transactions.
Yeah, that makes sense.
So regulators are trying to figure out how to oversee this whole stablecoin market. It's tricky. They want to keep things stable and prevent fraud, but they also want to encourage innovation.
It's a tightrope walk, for sure. Now, what about this tokenization thing? Is that just a fancy buzzword?
Tokenization is more than just a buzzword. It's got real potential. Imagine owning a piece of a skyscraper or a government bond, but through a digital token. That's what it's all about. Turning real-world assets like real estate, art, even intellectual property into these digital tokens that can be easily traded and managed on a blockchain.
So it's like taking something tangible and making it digital.
Exactly. Makes things way more efficient and accessible. For instance, tokenizing real estate could make buying and selling property easier and cheaper, potentially opening it up to more people.
I can see the appeal, but is this something we'll see soon, or is it still years away?
It's still early, but things are moving fast. I'd say expect to see some serious growth in the tokenized asset market in 2025 as more big players get involved and regulations catch up. Keep an eye on it, for sure.
Definitely will. All right, we've covered a lot of ground in the digital world. Let's shift gears and talk about the good old U.S. stock market. What's the forecast looking like for 2025?
Well, Cha-Ching had a bunch of different predictions, highlighting both potential growth and risks. Bloomberg, for example, projected a 2.5% GDP growth, mainly driven by strong consumer spending. Seems to be a recurring theme.
Consumers keeping the economy going. Makes sense.
Right. JP Morgan was also on the consumer-driven growth train, emphasizing the resilience of the U.S. economy.
So optimism in the air.
Yeah, but they also pointed to some potential shifts in the labor market. Some sectors booming while others face challenges.
So a mixed bag, basically. Are there any specific sectors that stand out as potential winners or losers?
BlackRock seems to be all in on tech, specifically the Magnificent Seven, Apple, Microsoft, Amazon, you know the gang.
Usual suspects.
Yep, they've been killing it in the market thanks to their innovation and, well, dominance.
But wasn't there some concern about the overall market stability, valuations and all that?
Yeah, BCA research, for instance, highlighted that. They're saying the economy might be doing well, but stock prices have gotten so high that it might not be sustainable. So a market correction is definitely possible, which could impact even those strong sectors.
The age-old dilemma, high valuations.
Mm-hmm.
So are we heading for a downturn, or is there still room for growth?
It's tricky. The Cha-Ching experts highlighted the risks, but they also stressed the importance of diversification and smart analysis. Don't chase the hype, they said. Focus on companies with solid fundamentals.
Solid advice. So don't put all your eggs in one basket. Got it.
But weren't there some dissenting voices too? People who weren't quite so optimistic?
Oh, yeah, there were a few contrarian viewpoints that are worth considering. Like there's this independent analyst, Joseph, he was on Cha-Ching, predicting a pretty significant pullback for the S&P 500, down to 5,500, he said.
Whoa, 5,500. That's a big drop. Why so pessimistic?
He's concerned about the Fed's policies and the weakening U.S. dollar, thinks it could hurt equity inflows.
Makes you think. Any other contrarians we should know about? There's also Michael Howell. He's worried about liquidity risks, you know, the increasing corporate debt, the need for treasury debt rollovers. He thinks we might be headed for a liquidity crunch.
A liquidity crunch? That doesn't sound good at all. What does that even mean?
It basically means there's not enough cash available in this system to meet short-term obligations.
Ah, okay.
That can lead to lending freezing up, businesses struggling, investors getting stuck. Howell's point is that we got to watch liquidity conditions closely, consider the risks along with the opportunities.
Makes sense. So we've got bulls, bears, optimists, pessimists. It's a lot to take in. But before we get lost in all that, there's one region that caught my eye, Taiwan. They did surprisingly well in 2024, exceeding expectations. What's their secret?
Taiwan's performance was definitely impressive. Cha-Ching had a whole episode on it. They pointed to a surge in domestic investment, local funds pouring into their market, shows a strong belief in their own economy. Plus, their financial sector saw huge growth. Banking, insurance, securities, all posting record profits.
Wow, sounds like they're on a roll. But what's fueling this economic boom? What makes them stand out?
I think a lot of it has to do with their role in the global tech scene. Companies like TSMC, the world's largest chip maker, and Foxconn, the electronics giant that assembles iPhones, they're vital to the supply chains of some of the biggest tech companies worldwide.
Ah, so they're riding the tech wave, especially with AI and 5G pushing things forward. Does this mean we should dump our U.S. stocks and go all in on Taiwan?
Not necessarily. Diversification is still key, but yeah, Taiwan is worth a closer look, especially if you're looking for opportunities beyond the usual suspects.
Noted. Okay, we've covered Bitcoin, Ethereum, the U.S. market, even Taiwan. But there's another tech giant looming, Apple. What's the buzz around them for 2025?
Apple's always cooking up something big. This time it seems like they're going to shake up the AR/VR world. Rumors are flying about a potential paradigm shift, moving beyond smartphones and into immersive experiences.
I can already picture myself taking a virtual tour of the Louvre,
Mm.
attending a virtual concert with friends from all over the world, or even learning new skills through a VR program. What do you think?
The possibilities are huge. Apple's really good at taking complex technology and making it user-friendly. Remember what they did with smartphones and tablets? They didn't invent them, but they made them mainstream. And now they're about to do the same with AR/VR.
Yeah, good point. It's not just about the tech itself, it's about how Apple makes it part of our lives. So, for investors, should we jump on Apple stock or look beyond the tech giant itself?
Well, Apple's definitely a key player, and their success will impact the whole tech ecosystem. But you could also look at companies like TSMC and Foxconn, who are part of their supply chain. They're going to benefit from the increased demand. And then there are the software developers and content creators, the ones building the experiences that make this tech come alive.
So many investment opportunities.
Yeah.
But before we get lost in the future, let's talk about the elephant in the room, the return of you know who.
The political wild card. It always throws a wrench in the works, right?
No kidding. His policies could really shake things up, both here and globally. What are the potential implications for our portfolios?
That's the big question. It's hard to predict exactly how his policies will play out and what they'll mean for the economy and markets. But we can expect some volatility, especially in areas like trade and foreign policy.
So buckle up. It's going to be a bumpy ride.
Exactly. Staying informed and being ready to adapt is key.
Solid advice. All right, everyone, that wraps up part 1 of our 2025 deep dive. We've covered Bitcoin surge, Ethereum's big upgrade, the U.S. market outlook, Taiwan's surprising performance, and even Apple's AR/VR revolution.
We've looked at the good and the bad, the risks and the rewards, and even dipped our toes into the crypto craze. But there's more to come.
Stay tuned for part 2, where we'll get into specific investment strategies, explore those risks and opportunities in more detail, and maybe even make some bold predictions of our own.
Can't wait.
See you soon. Welcome back, everyone. Part 1, we cover the big trends for 2025. Now let's talk strategy. How do we actually play this?
That's the key, right? Not just understanding what's happening, but knowing how to react. Let's start with the U.S. market. Remember, we've got a mixed bag of predictions.
Right. Magnificent Seven, potential dominance, but also those warnings about high valuations, possible pullback. So how do we approach investing in this environment?
Well, the Cha-Ching folks were big on balance. Diversification is super important, especially with those high valuations. Spread those investments around, different sectors, different asset classes. Don't put all your eggs in one basket.
They kept saying, don't chase the hype. But they did mention some interesting opportunities. Remember, one of the hosts was really bullish on banking.
Yeah, they seem to think deregulation in the banking sector could be a big thing under the new administration. But it's tricky. It ties back to those liquidity concerns we talked about. If Treasury yields keep climbing, the whole financial sector could feel the pressure.
So it's a bit of a gamble.
Kind of, yeah. It's a complex situation. But for investors who are comfortable with a little more risk, are there any high-growth sectors worth looking at in 2025?
That's what I want to know.
Well, AI and fintech are still hot. Huge potential for disruption there. Just think about things like generative AI, personalized financial services.
Wait,
Could change everything.
I'm getting FOMO just thinking about it. But those sectors can be pretty volatile, right? How do you balance that risk with the potential gains?
You're right, they can be volatile. That's why it's crucial to look beyond the hype and focus on the companies with solid fundamentals, consistent earnings growth, good market share, a clear advantage in their industry.
So it's not just about chasing the shiny new thing. Got it. What about investors who are more interested in stability and income than high growth? What are their options in 2025?
Fixed income investments could become more attractive, especially if those treasury yields go above 5%. Bond prices usually drop as yields rise, which could create some nice buying opportunities.
Makes sense. What about those classic defensive sectors?
Consumer staples, always a good bet during uncertain times. People need their essentials no matter what the market's doing.
True, true. So we've got a basic portfolio strategy. Diversification, focus on fundamentals, a mix of high growth and defensive plays. But what about some tactical moves? How do we stay ahead of the curve and take advantage of those market shifts?
Remember those predictions about a possible market correction? That could be an opportunity. Corrections are natural, and they can create some amazing buying opportunities if you're prepared.
So having some cash on hand is important.
Exactly. That way, you can jump on those dips without having to sell your existing investments at a loss. Corrections can be scary, but they're also a chance to buy low.
Patience is key. And speaking of opportunities, we can't forget about crypto. What should we be watching in 2025, besides Bitcoin maybe hitting $100,000?
Cha-Ching talked about the possibility of banks offering custody services for Bitcoin. That could be huge. It would bring Bitcoin further into the mainstream financial world.
Custody services, what does that mean exactly?
It means banks would store and manage your Bitcoin for you, just like they do with your other assets.
So your Bitcoin would be held securely by a trusted financial institution.
Yep. Could make it a lot easier and safer for regular investors to get into crypto. They even talked about Bitcoin potentially becoming a reserve asset, which would make it even more legitimate and attract even more institutional interest.
Wow, that would be a major shift. What about Ethereum? What does 2025 have in store for them?
A lot depends on that Prague Electra upgrade. If it really delivers on its promises, scalability, lower fees, Ethereum could see a huge surge in adoption from both developers and users.
And that could potentially lead to a higher price for Ether.
It's possible, but remember, there are always risks. The upgrade could run into problems, or maybe it won't get the adoption they're hoping for. Gotta stay realistic.
Cautious optimism, right? Now, what about stablecoins? They seem to be getting more popular, especially with regulation possibly on the way. What are your thoughts?
Regulation is a tough one. On the one hand, it could make stablecoins more legitimate and open the door for wider adoption, especially among those big institutional investors who want clear rules. But it could also stifle innovation and make it harder for new players to enter the market.
Finding that balance is so tricky. But it seems like that's a constant challenge in the crypto world, isn't it?
Definitely. Crypto is always evolving, pushing boundaries, challenging the old ways of doing things. That's what makes it so exciting. But it also means you got to be careful and informed.
Very true. Let's circle back to that political wild card we touched on earlier. Remember, the return of you-know-who.
Right, right. Well, we don't want to get into politics. It's important to acknowledge that those political decisions can really impact the economy and the markets. His policies could be good for some sectors, like energy and manufacturing, but they could also create more volatility, especially in areas like trade and foreign policy.
So how do we navigate this political minefield as investors?
Diversification and adaptability are key. Don't put all your money in one sector or region that could be heavily affected by those political decisions. Stay informed about the policy changes and what they might mean for your investments. And be ready to adjust your strategy as things unfold.
Solid advice. Okay, before we wrap up this investing masterclass, I gotta ask. We've talked about lots of potential winners, but if you had to pick one, the biggest winner of 2025, what would it be?
Ooh, that's a tough one. So many exciting things happening. But if I had to choose, after considering everything we've discussed, my bet would be on, well, you'll have to wait for part 3 to find out.
Oh, the suspense. Don't worry, everyone. We'll be back soon with the final part of your 2025 deep dive.
In the meantime, think about everything we've covered. What trends are catching your eye? What opportunities excite you? What risks are you worried about?
Share your thoughts on social media. Talk to a friend. Let us know what you think. We'll see you back here for the thrilling conclusion. Welcome back to the final part of our 2025 deep dive. We've talked markets, strategies, AI, AR/VR, even those political curveballs. Ready for the grand finale.
I am. We've gone through the ups and downs, the risks and rewards, explored all that crypto craziness.
And of course, you left us hanging in part 2. Everyone's dying to know your pick for the biggest winner of 2025.
All right. The suspense is killing me too. Drumroll, please. My bet is on the convergence of AI and AR/VR.
So not a specific company, but more of a big picture theme.
Exactly. It's not just about Apple dipping their toes into AR/VR. Think bigger. This technology has the power to change how we experience the world. Education, healthcare, entertainment, you name it.
Yeah, I can already imagine taking a virtual tour of the Louvre, attending a concert with friends from all over, learning new skills through a VR program. It's pretty mind-blowing.
Right. But to really make that happen, to create truly immersive experiences, you need serious horsepower. That's where AI comes in.
Ah, so AI is the engine behind all this.
Exactly. It's the brain behind the beauty. AI will be crucial for making those AR/VR experiences seamless, personalized, truly engaging. Think virtual assistants that know what you need before you even ask, realistic simulations that adapt to how you behave, content that's tailored just for you.
It's like stepping into the future.
Uh-huh.
But I know there are always challenges with new tech. What kind of roadblocks do you see?
Well, on the technical side, creating those truly realistic, immersive experiences requires a ton of processing power and advanced software. That's a big hurdle to overcome.
Makes sense.
And then there's the privacy issue. As AR/VR becomes more and more a part of our lives, we got to make sure our data is protected, used responsibly.
Yeah, definitely a valid concern. But the potential benefits seem huge, almost too big to ignore.
Absolutely. Think about education. Kids could explore ancient ruins, dissect a frog, all without leaving their classroom. Healthcare. Surgeons practicing complex procedures on virtual patients before doing the real thing.
It's like science fiction coming to life. So as we wrap up this deep dive, what are the key takeaways for our listeners? How should they approach 2025 with all its twists and turns?
First and foremost, stay informed. The world's changing fast, so keep up with the latest trends. Don't just skim the headlines.
Right, do your research, dig deep, get different perspectives.
Exactly. Second, be flexible. Change is the only constant, so be ready to adapt, embrace new opportunities.
Don't be afraid to question what you think you know and try new things.
And finally, remember, investing is a long game, not a quick win. Think long-term, build a solid, diverse portfolio, and don't let those little bumps in the road throw you off course.
Amazing advice. Thank you so much for taking us on this incredible journey through the world of 2025.
It's been my pleasure. I hope everyone found it insightful, engaging, maybe even got some inspiration for their own 2025 game plan.
Remember, folks, we create the future. So go out there, embrace the possibilities, and make 2025 your best year yet.
Couldn't have said it better myself. Stay curious, stay informed, and keep exploring.